Thanks for joining me. It's Sunday, 21st of November in the afternoon. I'm just going through my charts to write my reports for my subscribers. I just thought I'd run through some of the trades that we were looking at last week, some of the trades we did, some of the patterns that I'm looking at that we traded last week, and also for what I'm looking at for this week, give you some ideas for yourselves. So gold, as you probably know if you've been watching my videos during the week, hit this trend line resistance up there. This is where we expected the market to start turning around. And really, this worked way better than I thought because we kept selling at 1868, 1872 in that sort of 4-point range. And pretty much every day, the market tested that level and came down. So shorts just kept working. We had stops above 1877, which was lucky because on one day we just poked up to a fraction below 1877. But still, didn't matter. The market came down to our targets each time. So, I mean, really, just that trade alone last week was perfect. That's actually all we needed to do. Let me show you some more. Right, there you go. I've zoomed in on the daily chart just to have a real close look at that trend line and show you how perfectly it held, scalping away, selling there and buying back on the sort of a 10-point dip, 10, 15-point dip actually. Really worked nicely. Now, see this bearish engulfing candle? That is quite negative, as you probably know. We did have a bounce back, but we only managed to retest the trend line, and Friday we came tumbling down, with a high of 1865. So this looks quite negative to me. Now I'm just going to show you the daily. Sorry, no, I'm not going to show you the weekly chart. That was the daily chart. There's the weekly chart. Quite a negative candle there. The new high for the rally couldn't break through the trend line, and then we closed significantly lower than the close of the week before. Two big blue candles, but no follow through. So really, this market doesn't look very strong at all. Gold really doesn't look very strong at all. If I scrunch this chart up again, just to remind you that really we are only in one huge sideways wedge pattern. So we really could drop quite significantly over the days and weeks ahead. Looking at this daily chart, we could put a little trend line in here. Actually, that's not working. Right, there it is. Now this trend line is at call it 1834. So that shows us that we could drop another 10 points before we really find any decent support. Now, I'm going to have to show you the short-term chart. There you go, 4-hour chart. Now, I was calling this as a head and shoulders pattern last week, and I decided that if we broke the neckline at around 1852, 1853, then the market would plunge down to this support level, very minor support level around 1840. So this played out perfectly. You can see actually in the morning session initially, we bounced right off that support level. So taking profit from our shorts up here around the support level worked. We then bounced back as far as 1865, just short of that 1868 level, and then plunged. Now, once we broke the neckline, we dropped another 10 points very quickly. I actually had a stop to enter order, a sell stop to enter order, because I'm too old and too slow with my breakouts. So I just leave a sell stop order, and that gets triggered automatically when my price, when we break below and hit a certain level. My stop to enter order was at 1850. Actually, it was 1850. I gave it a bit of leeway. Now, to be fair, I wasn't quick enough. I didn't buy it back at I was looking for 1842, funnily enough, and we only got down as low as 1842 and a half. So I didn't actually manage to take the profit on that. In the end, I got out around 1847, which was not ideal. So gold continues to be a very interesting market to trade. Resistance up here around in the mid to low 1850 area. If we bounce back that far, I don't think we probably will, but let's see if it does. That would, for me, would be where I'll be trying a short position on Sunday night or Monday. If we get up to there, I'm looking for the first target of 1840, 1839, minor support level there. Ties in maybe with these spike lows you can see over here. 1841. I personally would not be buying into a long position there. Might cover a short and then sell a bounce back up here. But ultimately, I think we will break down. I think we will go to 1825, which is the 100 period moving average on the 4-hour chart. But eventually, I do see us getting down to the sort of 1820, 1850 area, which should be a half decent support level. And when we first test that level, I really would be expecting a bounce off there. Now, don't forget that trend line I showed you, that horizontal trend line I showed you at 1834, 1835. So that would be the next target after this little fib level. Once we break below there, then I think we go very quickly to 1825 and the 1820, 1815 area, which I talked about just now. A good support level, ties in with a little bit of congestion that we had on the way up. So that is where I would be certainly taking my profits on my short position, and we'll have a look at it when it gets down there and see what signals we're getting, but I might even try a long position just for a short-term bounce. Now, silver was pretty straightforward as well last week. Look at this red 200-day moving average. I'm just going to zoom in a little bit to the more recent action. The red 200-day moving average really doing a great job of support back in June, resistance on the bounce back in August, and then obviously we stayed below there and then collapsed. Now we've had a nice bounce back. Initially, can you see how the blue 100-day moving average did a really good job as a resistance? So we're going to watch that as a support level on the way down. And the 200-day moving average there doing a perfect job as resistance, which is exactly what we expected. Myself and subscribers were selling into short positions up there. We had a real nice bearish engulfing candle on this day here. What was that? That was the 16th. So that was 5 days ago. We spiked up, just about made a new high, and then collapsed below the previous 2 days, closing below the previous 2 days. So that was a very negative candle, indicated that the sellers were really taking control of silver after rejecting that 200-day moving average resistance. I'm going to take this trend line off because that's no longer relevant. There, hang on. There we go. Right, tried to bounce back the following day. That's quite normal, but soon enough, the sellers came in and the market turned down. So the fact that we've rejected that with these negative candles does indicate to me that silver will go down further. Let's just have a quick look at the weekly chart in case there's anything I'm missing. Again, similar to gold, new high, but a lower close on the week indicates to me some weakness in the silver market. Very frustrating for you gold and silver bulls. These guys who've been talking gold up for such a long time with QE and the threat of inflation. Well, no longer a threat, is it? Inflation is absolutely rampant. Inflation is something in levels we've not seen for, I think, at least 2 decades, maybe 3 in some parts of the world. If that is not enough to kick gold off and send it into the stratosphere, then nothing is. The problem is, with high inflation comes high interest rates. Obviously, bond yields will increase. Eventually, they're going to have to put up interest rates. I've got my own views on that. I really do think that we're in for a period of higher interest rates through next year, which is going to be quite catastrophic for some financial markets. Maybe even for the property markets, but I'll do a video on that on another day. But if I'm right, and if this inflation problem is sustained, then I really do see some downside for gold. I'm afraid I'm not buying into that gold as an inflation hedge story, because the thing is, gold doesn't yield anything. So what's the point in owning gold when you can put it in the bank and get, I don't know, maybe we'll get up to 2% interest rates or something like that. I don't see the point. Anyway, so far I'm being proved right, because gold isn't really managing to sustain the rally. There are those gold bulls who keep jumping in, but soon enough the market does turn around, and I think the pressure is now to the downside, and I think silver will follow. But having said that, in the very short term, silver does have a support level of around 24.50, 24.40, and I think that could be the low for the morning, at least on Monday. We could get a decent bounce back, maybe 30-40 pip bounce. So for scalpers, that could work really well. But eventually, maybe later on Monday or maybe later in the week, I think we will break below sort of 24.35, and I think we'll go straight down to 23.90, 23.80, which will be probably the biggest support level of the week. So maybe a low for the week there. Crude, WTI crude has switched over, has rolled over to the January contract from December, and we are seeing something of a correction here. I'm not going to go into the fundamental reasons why, but not a huge surprise. Again, bearish engulfing candle that we saw the week before, with a little, and really we just marked time, consolidated after that move to the downside, and now we're seeing further moves to the downside. Yet another bearish engulfing candle here, actually, with a high above the previous day, and then a low significantly lower than the previous day. So I think we are going to continue lower in oil and look into the downside. We do have some good support around the $73 area. So we're now trading around $76 for the January contract. I could see another losing another $3 to head towards sort of 73.40, 73.00 this week. Now that will be the best support level of the week. In fact, really in my books, that's the only support level of the week. We then must hold above 71.70, which is this sort of spike high that we had towards the middle of the year. Break below there would signal further moves to the downside for me for oil. The Kiwi, the New Zealand dollar versus the US dollar was a good little market for us to trade last week, just trading this range really. So it was the 4-hour chart that I was focused on, the 500 period moving average there, and the 50% fib, and then the 50 period moving average, just giving us the resistance up there around 70.30, 70.40. Shorts there worked on the dip to the first target, which was the 61.8% fib around 70.00, 69.90. So relatively small ranges, but hey, scalping for 40, 50 pips, that'll do for me. I don't mind. But I think that probably the Kiwi will continue lower against the US dollar. And actually, I should look at the US dollar. This is the US dollar index. So I've been really focused on this lately because, as you know, we were pushing higher. And once we broke through this area here, this previous high, which I think was the unemployment, non-farm payroll day, 94.62, we then shot through there on the higher inflation number and we've rocketed up. Now, this was a bit of a concern to me. This kind of negative candle there, sort of a shooting star follow. And then we did see some follow through to the downside, but we recovered very quickly on Friday. Now, there are two important points here. Is this a double top? Because we didn't beat let me see, that was Wednesday's high, wasn't it? We couldn't beat Wednesday's high on Friday. So is that a double top whereby the market then turns around and heads south? Or are we going to see a push up through there at the beginning of next week and go higher? Personally, I think that this is just a pause. And I think that we will break higher, and I think the dollar will continue to see significant gains as we go through to the end of November. Looking at it on the weekly chart as I am now, as I just try and move that up, you can see, I mean, for me, this looks like a clear path. Well, certainly up to 96.40, 96.50, and then I think once we get through there, we're straight up to sort of 97, well, 90 above 97.50 anyway. 97, where am I looking at there? 97.70. Yeah, we really could have a good 100 to 150 pip run in the US dollar index. I really do see some significant upside. Excuse me, I had to take a bit of a break there. I'm back now. Right, I'm now looking at the dollar yen, and the dollar yen, there we go. I'm only showing you this because it means absolutely nothing to me. I don't really know what's going on. We do have this big bearish engulfing candle that we had on, I think it was Wednesday, but this pattern really makes no sense to me at all. Weekly chart, well, we kind of respected the 23.6% fib originally, then we burst below it and then we recovered. So right now, I don't really know what to do with that. Euro yen looks to me like it's going lower, and I think the euro is probably going lower against the dollar as well. You can see 100-day moving average there. It's seemingly working as resistance once we broke through it. The only support of the week that I can see is for the euro yen is around the August low and the September low, which is also around the 50% fib. Now, I don't think that will hold on the next test. Having said that, of course, it did hold on Friday. We bounced right off there, but I think we'll retest it again, and I think we'll break lower. Time will tell. Canadian dollar versus the yen is also retracing a lot of those gains. 38.2% fib was tested on Friday. Now, I had a buy down there with stops below 89.75. We got down as low as 89.71, so I'm hoping that was not enough to take us out of the long positions. Well, anyway, there wasn't that much of a bounce, and we had to close the position for Friday night anyway. If we get a bounce back, then I see strong resistance at around 90.00, 91.10 if we were to get that far, but that would require a good 80-90 pip rally, and I don't really think that's going to happen. I think this bear trend will resume, will dominate for this week, and I think we will break lower eventually. Canadian versus the US, we had resistance from this trend line. And we also had resistance from the 61.8% fib, which is up around 126.60. So I had 126.60, 126.70 as my resistance level on Friday. That worked. Obviously, we halted right bang on there. We've pulled back. So we've pulled back and we've closed below the trend line as well. So I think pressure is to the downside. This is the only resistance level that I have for the week, and it might trigger a little bit of a move to the downside, although I don't see anything sustained, to be honest. I think the US dollar will win over the Canadian dollar eventually, but we could just have a pullback at the first part of the week and then hit a support level, regroup, and then push up through that resistance perhaps later on in the week. Euro US dollar testing some support levels, but I don't, well, the 61.8% fib on the weekly chart was at 112.90, and we kind of broke that and got down as far as 112.48. I think that this is just going to continue lower. I think the dollar goes higher. I think the euro goes lower. Nothing really on the daily chart to speak of, I don't think, just other than very clearly in a bear trend. And I don't see any support that is going to turn this around. We are oversold on the daily chart, although we've only really just started to get oversold in the last week, and that for me is not enough for this market to turn around and go higher. So as I say, I think euro US dollar continues lower. Something interesting going on in the US stock markets. The S&P is sort of consolidating gains, although we did make a new all-time high on Friday, hitting 47.23 for the December contract. Pulled back, closed lower on the day. The Nasdaq pushing ahead, so technology stocks looking fine. And then you've got the Dow Jones, which is doing the reverse, sort of S&P caught in the middle, going sideways. Nasdaq higher, but Dow Jones headed lower. So this is a slightly odd situation. We'll see how it develops. I must say I don't see any. I think this can continue. I think the Dow can actually go lower. The Nasdaq can actually go higher. Maybe the S&P will continue sideways. So no, slightly confusing situation. I'm going to wait and see what patterns develop. We would, if we get some sort of big head and shoulders pattern in the Dow, that would be interesting. But there's no indication of that yet. So at the moment, I'm in a sort of wait and see phase. I'll finish up with crypto. Bitcoin's holding this trend line quite nicely, although I don't think that is that important. And if we hold below sort of 59,000, 60,000, I think eventually there's a good chance we can get down to sort of 54.5, 53.5. That's a massive support level, and would be I think that would be a fabulous buying opportunity if we get down as far as that this week. Okay, I hope that's helpful. I'll try to run through as much as I possibly can, give you some ideas for this week. Please do me a favor. Please like, please share, please subscribe. In fact, do subscribe, because I'm going to be pushing out a lot more videos going forward, and you're going to need to be alerted so that you don't miss any trading opportunities. And also, I'm really starting to do some education. I've been recording some videos, and I'm going to release those sooner or later. So please, as I say, do subscribe. Make sure you don't miss those.